Hello traders, welcome to the weekly market overview with me Pierre at PAFX. I hope you guys had a great trading week last week, and I'm looking forward for what we have for the upcoming week. I think soon we're gonna have some slow going markets heading to August, and yeah, all the big traders and institutions being on vacation and stuff like that. So we might get a little bit slow markets for the upcoming 3 or 4 weeks. But who know? With Trump on the phone and tweets, things might keep moving anyway. We still have a lots of Brexit going on and stuff like that. So these kind of things may give us some trading opportunities anyway. In any case, I will just remind you guys that the registration for my course and mentoring program is now open, as you see. So for those of you who's interested, I know that many of you have been asking when is the next course, and that would be the first week of August. And yeah, to do so, just visit my site at pa-fx.com and go to courses, and there you will have all the information you need. As usual guys, please, if you find these sessions helpful, hit the like button. If it is your first time here, do not forget to hit the subscribe button to get all the notification. We start with the disclaimer as every time, so I want you to read it carefully to know about the risk involved in trading, and that these sessions are only the way I see the market and the way I gonna trade it, and it's not a signal in any way, yeah? So, what we do have for next week as news. As you see, next week for high impact news, we do not have a lot, nothing high impact until Wednesday, where we have CPI quarter and quarter for the Aussie and crude oil inventories. Thursday we do have main refinance rate for the euro, ECB press conference as well. That could be something, but the market is not expecting any major change on that. So I'm not sure if we're gonna get any big movement, but I think the press conference is always interesting to see if any change in the ECB language, that would be something to look for. From the US, we do have the core durable goods order, and on Friday we do have the advanced GDP quarter and quarter for the USD. That is also could be something interesting to look at. If we put on the medium impact events, you see that we do have a lot of that during the week, especially for the euro on Tuesday. Important PMIs for French manufacturing service, same for German manufacturing and service, and later on we're gonna get for the whole euro. So this may be an important day for the euro anyway, so keep an eye on those medium impact levels as well, yeah? So let's look at our charts, and we start with Dixie on weekly time frame. As you see guys, we've been talking about, it's getting boring talking about this 95.15 level. Once again, we tried to break above that once again on the weekly. There was no close above these levels here. As you see, we do have the 200 simple moving average here, that also at that same area acting as dynamic resistant. So last week was another try. The dollar did reach a little bit higher, as you see, a little bit above these highs here, reaching all the way to monthly R1, but it ended up with a failure, which we have This move here on the RSI, as you see, is a hidden bearish divergence, and now from this top and forward we start having a normal bearish divergence as well. So everything at the top here, as you see, all the wicks coming from the upside, is signaling that we probably may gonna get that deeper correction on the dollar. Yeah, and I think if to be realistic, it is possible to reach monthly S1 or even toward 92.50 as well if we keep pushing lower. So once again, many tests, and this area here showing lots of resistance, and that's why it's important to keep an eye on that level. If we go down to the daily time frame, you see that this divergence been going on since this high here. We still have bearish divergence on the RSI. We are trading inside this range now. This could be our summer range, who knows, something like this inside this box. And it would not be the first time to see a whole month of ranging like this during summer months. So that is possible. Let's go back. What may happen, but as you see, Wednesday try to break and close above 95.15, didn't happen. Thursday another try and fail after reaching previous highs here and a little bit higher, reaching all the way to monthly R1. This move here started after the Trump comments about not liking that the Fed keep making those rate hikes. So this move started based on that, and on Friday he repeated and tweeted that he's not happy, and talking about the Chinese and the ECB manipulating and not rating hike, and why will US only rate hike. So that is the main reason for this very strong push from Thursday and continuation on Friday. Now, what we're looking at for next week is, of course, here I want to see this level broken. This is the NFP high here. So if we close below this on the daily, then we do have a possibility. Any close below this, we will open the doors back down to the NFP low or even lower to test these lows. Yeah, and as you see below that, that would be the retest of the monthly S1 area down here. Yeah, this low of this major candle is very, very important now and may act as support. So we do have a clear range here. You see it here on the daily. Yeah, any break below that will open the doors toward the monthly S1, and next below that would be the 92.55, where we also may have the daily 200 moving average when the price, and if the price reach this area, the daily 200 probably would be at that same level. The reason I think this is an important level is because of this level go back many times, tested here, support, flip zone, tested support again, tested resistance, and here it was tested as support. So that's why I see this as a very important level. And based on this rejection, divergence, despite everything actually is saying that the dollar is strong, but we keep seeing major trouble every time the price reach the 95 area, as you see here. So on the 4-hour time frame, you see it more clearly, the range I'm talking about. And now we've reached once again the 200 moving average on the 4-hour. We broke below it this here, but then we broke back above and went all the way up, retest up, and now rejection once again. So if you are holding a short, you want to see this area broken for more downside to reach these lows, and if that broken, as I said, the doors will be open all the way toward monthly S1, and that would happen very, very fast since it is a clean area down here, as you see. Another thing that may happen now when the RSI is at the extreme oversold is another correction up toward the neckline, and possibly once again another bounce. In any case, the 95.15 keeps showing that it is an important level to keep an eye at. If that reaches, then it is a possible level to short for another leg down toward these levels. Yeah. If this was our last low here, and we can draw an Fibonacci on that, if the market opened and start moving higher, of course, from this level without making lowers. So that would be the 618 as the best area to short at, since it happens to be at the same level of structure where we did have many troubles in the past, and then back down. Listen guys, dollar is still strong long term, but technicals is telling that we may have some correction lower, probably toward these lows. Probably this would be our summer channel, I don't know, but what we know that this area up here is a very important level that we've been testing so many times to break now and failed every time. So I think it may time soon for the dollar to make that deeper correction lower. And I may be wrong, as it happens before. So let's take a look on gold. Gold on the weekly time frame. The RSI is at the extreme oversold right now, and tested many important levels. This is the 200 weekly moving average, been tested last week, and we have a close below that. But you see this very strong rejection when the price broke the 1220 that I told you last week that gonna be an important level. So we tested deeper toward the 1212 area before we've got a very strong push back above this and all the way above the monthly S1. So this is a clear rejection. Bulls are defending this level, especially after those Trump comments. On the daily time frame, what we have here right now is a bullish divergence on the RSI. As you see, a strong divergence, since it is between this low all the way up here and these lows down here. So clear bullish divergence for now. Thursday, a very strong hammer, pin bar, call it whatever you want, a very strong rejection in any case. And Friday, we've got a close above the high of the pin bar, which is normally a signal for continuation or possible reversal. And the price, as you see, is back above monthly S1, and we could have some, if not a reversal, at least a deeper correction higher here. If we go down to the 4-hour time frame, you see that we've had this nice rounding bottom here, and that we closed near the highs, broke the neckline back above the monthly S1. So what I'm looking for gold is if we see that the price get accepted here, making some kind of flag or consolidation like this, something like this, that show us that the price is accepted at this level, or some kind of flag to try to trade the breakout in anticipation to move higher toward the 1244. That would be the first trouble area here for gold. And as you see, if we break this, we open the door for even more higher up toward the 1260, which is another very important level. But there is no need to start guessing things, guys. Take it one level at a time. As I said, it is a very clear divergence we do have here. Everything is happening at an important support level, As you see, this area been a very good support and resistance. So because of that, it could be a good reason to look for a long. 1230, 1240 actually could be trouble levels to keep an eye at, but if that broken, you see that will open the door to enter to this area up here and use this area as a possible continuation to the upside to reach the 1260. Yeah, very interesting chart. Oil still bearish, lower lows, lower highs, even on the daily. We broke below this important 69.50 that we've been talking about, and I told you a break below that will send us all the way to monthly S1, and that what exactly happened. And I still think there is some more to it. Yeah, looking at these structures, lower lows, lower highs, lower lows, lower highs. Let's take a look at the weekly. You see here we do have evening star formation. We had that, we've talked about this formation, and it is very possible to reach around this low down here for oil. Yeah, we do have some troubles on the way we should keep an eye at. So the first area that should be around 66. This is an important level, and down here 62.50-ish area and the 200 moving average may give the price some troubles near these lows. If you are holding a short, you could keep it as far as the price is inside this descending channel on the 4-hour. As you see, we've got a nice bounce, retested resistance, and then pushed back down again. Yeah, any break below S1 will send us back toward 66 and maybe to test 64 as well to reach these lows down here. So for now it is short, and you should keep looking to short it. If you want to wait for a higher retest, you could look for a retest of the top of the channel, or if we reach 69.40 once again, that could be another way to short it. Aussie Jappy, we still inside this range. After breaking outside of this range, we've got another higher high, went all the way back down, tested monthly pivot point, never broke back inside the lower range. So this still in a range here below the 200 moving average, but I still think that as far as this monthly pivot point and this area is holding, we could get another bounce higher on Aussie Jappy. 4-hour time frame, you see that we've got this push lower all the way down here, then rejected, and the last Friday the close was back right here at the neckline of this pin bar. There is a possibility that we may get another retest to this area. What we should be looking at this area is possible bounce once again from here, but if we close inside the lower box, I'm afraid we start seeing this happening to the downside once again. Okay, but we never tested the extreme highs of the box, and I still think that may happen. Yeah, Aussie New Zealand, another pair inside a box. As you see, the 200 moving average on the daily is going flat here and been acted as good dynamic support. After the next try here, we pushed back down, back up. We couldn't reach the highs. It looks a little bit pressured now after this divergence, this and this here, a nice divergence on the RSI. So we may break below this time, I'm not sure, but if that happened, then there is a possibility to move a little bit deeper toward monthly S1 area probably, or this level here could be the first trouble area. very interesting, and keep an eye on that. As you see, this level is also a possible trouble level. But the box been holding well so far, especially seen on the 4-hour time frame, as you see here. So last week we had this double bottom, we had the break, but there was no continuation to reach these highs once again to reach the top. So keep an eye on these lows down here next week. If you find any bullish evidence, as we had here, a bullish engulfing on the 4-hour was the signal to go longs, then you could try to go long targeting these highs, or which is the perfect scenario if we reach the top of the box. Yeah, as far as we are inside this box, we should keep playing it that way. Aussie USD, many tests at this level now. Let's go to the weekly. As you see, this pair now sitting on this important support and resistance level, and we've got 1, 2, 3, 4, 5 weeks testing to break the level, and all of them failed. All the wicks coming from the lows, showing that this level is strongly defended, and we may see some push higher here. Daily time frame, we start having a strong bullish divergence since this low here, as you see, and on the RSI you see it like this. So strong bullish divergence, strong support level that been acting as a strong support and defended well here. We clearly see that on these many tests, and no break. Last Friday candle, bullish engulfing, engulfed totally the previous body of Thursday candle. So the bulls are defending. The question is, when are we getting the continuation? What we know so far, that if we get any retest toward this level, is to try to buy it in anticipation of breaking to the upside, especially if we break and hold above the monthly pivot point. Short term, we need to break and hold above this high here, which is the NFP high. So on 4-hour time frame, it looks like this. Your first trouble level is these highs here and the 200 moving average on the 4-hour. If you are holding along already, you want to see this level broken, the retest failed to go below, and a continuation. And then if we break above the monthly pivot point, we start looking toward the 0.75. That is another important support resistant level, as you see, that also need to be broken to reach higher. Yeah, this is the ultimate resistance up here, and that would be a lots of trouble on that resistance here till we see it broken. So once again, guys, keep playing this range. If the price go back down toward this support, you should be buying and looking for trouble at this area, and if broken above these highs, then buy the dips on Aussie USD is the idea. As soon as we break above this, we should start buying the dips. Euro Aussie, same situation of a range, 3 weeks range, 3 weeks of testing to break above the 618 here. This level, I've been telling you for a long time now, it's gonna be an important level, and it showed us that it is an important level. Looking at previous structure, 618, 3 week trying to break it with and they all failed. Daily time frame, the divergence is getting stronger and stronger, a bearish divergence, and as you see, it is a clear range. The highs are very clear here at this level, 618. Friday was a push higher to break, but the day ended back below and went all the way to the mid-range once again. So it is still a level to short. So in our trading room, we've been talking about this box, and we've been trading this box all the way. Every time we reach the high, it is sell. Every time we reach the low, it is a buy, until we break outside of the box. In my opinion, as soon we break and hold above this range or below it on the 4-hour time frame, that should be the signal for the continuation from that box, even if it happens to the upside or to the downside. Looking at the daily, you see that range here is very hard to tell if we're gonna get some kind of lag and a continuation to reach these highs, or if that's it, 618 after breaking below this structure and the next push to the downside. So to not start guessing and stuff like that, it's better to play the box until it is broken, guys. EuroCAD, also another pair in a box. As you see, been raging sideways now. Thursday candle was a major candle, bullish engulfing, but we never got the continuation. Friday went back inside the range and closed in the middle. So the 200 moving average been acting as good dynamic support here, as you see. So that you want to see that broken to the downside if this will go down, or you want to see a close above this major candle here for another push higher toward the monthly R1. Best to go to 4-hour time frame and see that we've had this range in play for a long time now, especially talking about this one. Now we got a little bit break below, a little break above, but we've closed back inside. The 200 moving average on the 4-hour is acting here as support as well, dynamic support. Here you have it. So yeah, we need to see the price holding above or below this range for a continuation for the EuroCAD. Euro New Zealand, also consolidation, typically summer trading. As you see, a consolidation inside this box, best seen on 4-hour time frame. This same scenario here as Aussie, Euro Aussie and EuroCAD. Keep playing this box, guys. Long at the lows, short at the highs, until you get your breakout. Yeah. EURUSD, daily time frame, we are squeezing as you see here, and one could think that soon we may have any kind of breakout. Yeah, so if this triangle breaks out, then we still have the trouble at the monthly R1. So better to look at this whole range. This is the range, and this is what you should be trading. Right now, euro dollar is inside in the middle of that range and basically going nowhere. You could have some short-term trades, but in my opinion, the price need to break below these, or even better, below the yearly pivot point for really continuation here, to really see some kind of stronger move to the downside, or break and close above the monthly R1, above this previous high. That would start maybe sending us in a stronger momentum to the upside. Right now, sideways and very choppy. There is no real direction. We've got higher highs, we've got lower highs, then we have lower highs and lower lows. So there is no continuation, and it is choppy. Better to wait for the price to reach important levels. This level here is at least a short-term good support and resistance level, the 1.1710-ish area, as you see. back above the monthly pivot point and back above the 200 moving average, but I'm not looking so much at the 200 at the moment. It was respected here on the 4-hour, but then here there is it been not respected, so, and it is flat. So in my opinion, if you are new to trading, you could stay away of this or wait for clear breakout at least above this high up here, like something like this, and then continuation. Yeah. But looking at Friday's move, strong move, inverted head and shoulder, shoulder, head, shoulder here, broke the neckline. So any retest to the monthly pivot point and this broken neckline could be an area if you want to join a possible continuation up from a lower area. Then you could be looking at this level, but as I told you guys, a bit hard traded. The range is not really defined. The extremes are down here and up here is the resistance. Yeah, and we are now inside that, so keep in mind that it could be going this way for a bit longer time. Yeah. Sterling Aussie went all the way toward this support level here, and the reason I still have this level is based on these moves from long to the left, as you see. So it's been acting as good support and resistance level. We do have now the 200 moving average on the daily, and the price is playing around that. Still could be considered continuation bearish from here is possible, since we broke previous lows here on this move to the downside, and it could be seen also as good support and possibly a continuation up. But Thursday, nice rejection, and Friday, indecision candle. This won't help us for a direction. If we had a close at the highs on Friday, one could argue that we may at least reach these highs or even higher, but that didn't happen, so we need more evidence on this. As you see, we broke structure on the 4-hour time frame. We retest that structure at the monthly pivot point. We retested even deeper this time on Friday and got rejected once again. So if you really think this is a start of a reversal on Sterling Oz, you need to see a break back above the monthly pivot point, retest that hold at this level, that the price does not go back below, and then you could start looking for a possible continuation to these highs or probably even higher. Yeah, so this is only a bounce here, not a total reversal, and if we've got another retest to this level, then you may look for a possible bounce once again based on what happened here. Okay, so daily on Sterling CAD. Sterling CAD seems to be the leading one between the sterlings. We've got this push, consolidation inside this box, and then a break below that, and now we're getting some kind of retest. We're trading below the daily moving average. I think personally that we may see some more downside toward monthly S1 and to at least test these lows. Otherwise, why did we break in the first place? So while I was thinking that, as you see here, I published this in my trading room, that we should be looking for a retest and a possible bounce lower. The retest did happen, but it wasn't really toward the level I had expected. It was a little bit shy of that, and we've got this bounce to the downside, but then a bullish engulfing on 4-hour time frame. I'm not sure, this could be profit taking or something else. This could be a start of a possible reversal as well, since we do have bullish divergence on the RSI on the 4-hour time frame. It is possible, but to really be sure if this is a reversal to the upside, it needs to break back inside the box and then a continuation toward the highs. For me, I will be looking as first for a possible retest and probably another push lower, since we broke below this structure now, and as far as we are not inside the structure once again, I will try to short it if I get the right signals at that level. Sterling Jappy. So structure wise on the daily, you see that we are below the 200 moving average, which usually means bearish. I told you guys that we had this bearish hidden divergence coming here, and we've got a very, very nice rejection here on Monday and pushed all the way back down. So very nice to see that these hidden divergence that happened at previous structure, 200 moving average, as well as the resistance did work well. We've got a very nice trade to the downside after that. And now it reached the monthly pivot point. So if we draw a Fibonacci retracement based on that move, we see that at that same level around the monthly pivot point, we do have 618 Fibonacci retracement. And if this was like a higher high, a break above the neckline above this high, and if this was a continuation of making higher highs and higher lows, then this area at the monthly pivot point is an important level to look at for next week, where the price is testing right now for a possible reversal from here and start moving higher once again. As for now, the 4-hour time frame is bearish structure, but we've got retest, consolidation below the 200 moving average, as you see, that been acting as dynamic resistance in the past, support when retested here, but now broken once again. For those of you who think this is a good levels, you should keep watching the 1.146 as possible support level and look for bullish evidence, targeting 14750 as trouble area that may give you some trouble to the downside once again. What you could also do is keep watching this range go down to a lower time frame. You see it much clearly here, and if you want to be more safe, you want to see a break above this range on the 1-hour time frame, then continuation to 14750. Those are the ideas for possible continuation of these higher highs and higher lows structure on the daily. Okay, but of course, if we break below the monthly pivot point and break this low, then that will open the door for more downside on Sterling Jappy. Sterling USD reached a very important level. That's why I did publish a chart during this week. I think it was Monday or Tuesday, I'm not sure, mentioning that we've reached an important level where we do have monthly S1 and previous structure lows. This is a weekly chart, so it was based on these lows here, monthly S1 as well, and on the daily it looks something like this. Yeah, you see this is an important structure that been acting as good resistance and support in the past, and we've saw that we've got a deeper test and then rejected all the way back up Friday, bullish engulfing, and we do have a very strong bullish divergence on the RSI. So this could be a possible start of at least a deeper correction, as it happened here. We've got bullish engulfing and a bit higher correction before we start going down. So important level down here, 4-hour time frame. It was a break of this high and this high now, so it's time to look for, we do now a nice higher high, time to look for where we're gonna get a possible higher low, and if that happens, then we may start looking to retest these highs up here around the monthly pivot point and probably higher. The major resistance gonna always be the 1.33. This level up here is your major resistance. Any retest, if we got a deeper retest toward 1.30, that would be even better down here around the monthly S1. Good important level to try to take along from. I'm not sure if this would be our last high, but if that was our last high here and the price start moving lower, we do have the 618 at this structure at the moment if the price start moving lower doing the correction already next week. So keep an eye at 1.30, keep an eye of any possible bull flag here, and if that broken, then you could take the long in anticipation that we moving higher from this important structure down here. New Zealand Jappy was moving nicely to the upside, breaking higher highs and higher lows on the daily, as you see. Thursday, we've got a very strong bearish engulfing candle, and Friday, an indecision candle after reaching the support once again. So we broke below this trend line, we broke below the 200 moving average on the 4-hour, reach it all the way down here, retest, and we may get some kind of continuation back down to reach these lows down here. This down here is for me the better level that should hold if this will start moving higher again, because if this structure got broken next week on the 4-hour time frame, a close below these lows means that we may start moving lower once again on this currency. But to keep in mind this very nice rejection here, so it seemed that this area is defended so far, and we should keep looking at this level as a possible support and probably continuation of this whole move to the upside, especially if our New Zealand USD chart keep moving higher from here, because it looks on the weekly, you see that we've had this deeper correction toward this very important support, got rejected, the week after was down, and last week was a push higher all the way toward the higher than the middle of the previous week. So defended level, as you see, when it reached here the first time, we've got a higher high here. Now we do have a higher low. We're still looking for another higher high for a possible continuation up. Friday's candle was a clear bullish engulfing candle, showing that the bulls are defending these areas down here, but for really more upside or a strong reversal, what we want to see is a break above this structure and the monthly pivot point. Then we may reach monthly R1 or even higher toward these highs before another push lower. So that's it for this chart on daily. On 4-hour time frame, it looks like this. We closed at the high of the previous high, so in my opinion still not really broken, but for next week, if you get any retest toward this structure down here, that would be a possible level to look for bullish evidence for a higher low and in anticipation to break these highs. But as I told you guys, for a real reversal, you want to see a break of these highs up here. those need to be broken, then you probably take the retest or a flag or any continuation from this area. USD CAD, Thursday, a very strong push, broke previous highs. One start thinking that we may keep moving higher toward monthly R1 and reach these highs once again. But Friday's candle, as you see guys, was a very strong bearish engulfing back inside the range and broke a low below this low on the 4-hour time frame. So even on 4-hour time frame we've had higher highs and higher lows. Now it is the first time we break below a major low, broke below the 200 moving average on the 4-hour and just sitting at the monthly pivot point. This area here is your filter for possible more down. If we break below this, then we start looking to test these lows or even lower. Yeah, we should keep in mind this very strong push to the downside here. The last line of defense is down here, 1.30, 67, 68 area, and then 1.30 gonna be another market objective to reach. USD Chief. So after reaching the extreme highs here, got rejected all the way back down, did another try to move higher, did fail all 3 days, couldn't break higher than the monthly R1. So we are now back below monthly R1, back inside this lower range, and it seemed that there is more to it to the downside to test these lows or probably reach the lows of this range up here. After breaking necklines here, breaking these lows and continuation and a close near the lows. So it is a chart that we should be looking to short next week if we see a retest toward this level, or even better if we reach all the way to this high before we get our bearish signal to take a short on that to the downside. Yeah, if you are holding a short, of course you want to see this structure broken as first to target these lows down here. USD JAPY, we've had a very nice bearish divergence going on here on the daily, and I think we had on the 4-hour time frame. And if we go to the weekly, you see that this whole thing started at the retest of the 200 weekly moving average here. Price went back below monthly R1, monthly R2 and monthly R1 right now. We've testing the monthly R1. We broke previous lows here, as you see. Very strong bearish engulfing candle on Friday, evening star formation here on Wednesday, and Thursday was a confirmation. So it is still a bullish structure with a major high here, but as we broke a previous low now, and the strengths that we see in these moves, one could consider possible more downside. The first level I'm looking at for next week, if we've got any retest toward this neckline, so 112.20 to end the MR2, that would be a possible sell area to target these lows once again, if this would be the last low. And probably the most important one is the 110.80. This would be another structure to keep an eye at as possible support. As you see, the 200 moving average on the 4-hour moving the same time as the trend line here. So yeah, that is for this pair. Possible short continuation toward this level, or at least to reach the trend line we're still above the 200 daily moving average. We still do have major swings like this with another major swing high, so there is a possibility that we see another push higher, but for the time being it is possible short to the downside in this correction, especially if Dixie keep moving lower and gold keep pushing higher. For the Dow, guys, we've been talking about this important support level here, and that this would be the level that you should be watching for a possible bounce, and you will not see this broken. So last Friday we've got a very nice trade from that level. After this strong push lower, another push higher, and then double bottom, and boom, a very strong move to the upside. Seems that the market found a nice support at this level we've mentioned here last week. At that same level, 200 moving average on the 1 hour acting as dynamic support, making some kind of bullish flag, and probably another try to make another push higher. But if we look on the daily time frame, you see that we've had this strong bearish engulfing candle on Thursday, and Friday was another strong push against that. Still a bullish structure anyway, and we should keep seeing this high up here as an important resistance as for now. So if we get a retest toward this level next week, you could start looking for a possible bullish evidence on 15-minute or 1 hour time frame, buying in anticipation to reach monthly R1. If monthly R1 and this neckline got broken, that will open the door for even higher move on the Dow actually. So very, very interesting, and keep in mind, summer trading, we may get inside some kind of summer channel. Yeah, so that was the last pair, guys, and that's it for this session. Once again, I hope you like it. Once again, if you like it, please hit the like button, and if you are new to the channel, do not forget to subscribe. Yeah. For those of you who thinks it's interesting to join my trading room, you are welcome to do so. Just visit my site at pa-fx.com, and right now we do have an offer of $10 the first month for you. Thank you very much, and see you next week. Bye bye.